Welcome to the Real Estate Investing Academy, your number one source for all things real estate investing and personal finance. With your host, Tom Staub. Welcome, everyone. This is episode number 5. Podcast number 5. And again, just a quick plug. In the upcoming probably 4 to 6 weeks, I'm going to have a number of guests on. These first few podcasts are me just going solo, and in due time, we'll have some more guests on to highlight some of their concepts and theories and what they're teaching their clients and all that. So a lot to come. Also, I don't know if you've seen, but if you go to our website, reiacademy.co, there's a lot of stuff on there, a lot of content. There's an articles page, and I have, probably 60 to 70 different articles. Pretty economic heavy, finance heavy content. It's all free, so go there, check it out. My book's also on there too. It's strictly about, building a high level personal finance plan, as well as if you're looking to begin investing out of state, what that might look like. I wrote that book. It's about 100 pages long. I wrote that book more or less to help people out looking at the markets, looking at a deal the right way. So I'll probably rewrite some of those chapters in the next year or two, but for now, it's a good starting point for anyone. It's like $6 on Amazon, so check it out. And also, just real quick on there, if you are interested in live coaching or any sort of our tools, and by all means, send me an email. Throughout the video, you'll see it above. It's tom@betterturnkey.com. So, all right, enough of the plugging. I do want to talk about some things today. It won't be a long podcast, but there's a lot happening in the market, and I'll tell you about the genesis of this of today's topic, right? So, I'm developing a substantial resort in Arizona. Okay, about 40 minutes south of the Grand Canyon. It's a glamping resort. It's about a $3 million project. The resort's on 15 acres. It'll be 30 luxury grade units. Okay, and it's going to start developing here in September, October, right? And we're going through the process right now of the funding and all that. And it'll be opening in March of next year. So it's a really lucrative project. It looks really good on paper, really strong upside, pretty minimal downside. And we're in the last part of the funding process with the bank. And I'm seeing all sorts of signs of pullbacks on their profiles, of their preferences, what they're allowing people to borrow and all that. I tell you this because that is the evidence that we've been looking for a credit pullback or a bursting of credit. Now, keep in mind, if you look at the video on my website that Ray Dalio talks about, which is the basics of how the economic machine works, it's about a half an hour, a really fantastic video. Everyone should watch it. It's free. It's on the Other Masters channel on my YouTube page. And on there, he talks about how this is a credit economy now, and the credit bubble expands and collapses. And every time it expands, that's a bullish market, and every time it collapses, that's a sign of a bearish market. Now, we know that COVID's having an impact on a lot of different industries, but the bank that I'm going through is it's a pretty risky bank, meaning they take on projects that are generally higher risk, right? So if they're pulling back, and the conservative banks are pulling back too. And I say that because you think about businesses that are already tight on cash, looking for more credit, that's going to start tightening. You think about refinancing loans, that should probably start tightening. You think about the general loan market at all, and it should probably start tightening on who they're lending to. And so it's just something to be careful of. Again, in a couple of weeks, we'll have Aaron Chapman on. He's going to be talking about where the rates are going. He's a guru when it comes to the rates and what it looks like from a real estate lending standpoint. So we'll get him on here to talk more about that. But, I think my mic's in the photo. Yep, sure is. So yeah, I did want to talk about that. I think it's worth noting, right? Because one thing I'm getting a lot of is the question, Tom, is it now a time to buy, right? In the first episode, I talk about the supply and demand issue, how there's a 2.5 million unit shortage. There's roughly 4 to 5 million homes that could be in foreclosure in the lower end class, some in the higher end class, but so those would all have to go belly up for us to be exceeding supply in equilibrium. Don't think that's going to happen. We'd be lucky if we hit 3 million homes in foreclosure, which would be good for supply. My point is, though, who knows when the wave's going to start? I think there's some predictions that it could start as early as late fall, going into Q1 of next year. It really depends on how the feds and the government do or don't create additional stimulus. And it looks right as of right now, across the board, both the Democrats and the Republicans are all for stimulus. I think there's some debates upon who should be getting the stimulus, but in general, they agree that stimulus is going to be floating for some time. I think today, with the most recent package, today is July 28th, the most recent package that puts us at about $4 trillion of stimulus. It sounds like the need's around $10 trillion in stimulus to keep this afloat. So we'll see what happens here. But if that keeps going, I think foreclosures will be light. We still need a turnaround in the economy, but if that begins to dry up and people continue to miss their payments, you could see some foreclosures, and that I'm saying because that might result in some good deals for you. But where these deals are going to happen is the question. I look at markets all the time, right? Like just the fundamentals of markets that have diverse economies, that have growing population rates, that have year-over-year GDP growth, again, and a number of other variables in a market. And at the end of the day, the markets that are good to invest in have investors already there. And so there will be deals that happen from this. I don't think you're going to see a huge wave of deals in those markets. I think there's already enough attention there, enough eyeballs on the ground trying to find deals, which are hard to find these days. So I don't necessarily know if in the good markets that I like, you'll find a ton more deals. So that's my point is I don't think you're going to see a huge correction in those strong markets that people are moving to. The flip side of that, the markets that people are moving out of, the ones of New York and Jersey and Seattle, well, Seattle's doing okay, but San Francisco, LA, in due time, you might see some big pullbacks there. I think just recent report showed a 6% reduction in San Francisco on asset values, right? Rents are 20% or so down since I believe it was April. So I guess what I'm saying is, long story short, there will be deals in the market. I think you're going to see a lot of the deals happening in the C and D class range. You might see some deals in the very high-end luxury range as well. But for rental, what I like to play in, which is B minus, B plus, A minus properties, that cash flow, I don't think you're going to see a huge wave of opportunity there. I think you will see a wave of opportunity in the C and D class. So if you're a cash flow player only and you're okay dealing with the headaches of those tenants and whatnot, you should probably find some good deals here in the next 6 to 12 months. And those that want to buy a personal home, do consider either buying in a home or in a market that's already appreciating, or buying, if you're in a high-end market like San Francisco, I would probably wait until the correction happens a bit more before pulling the trigger. Again, these are all my opinions and advice. You have to do your own research, but that's where I see it going. So, long story short, I did want to bring up that and just address, the question of is now a good time to buy? And again, the answer I think is it depends on what you're buying, where you're buying. So let's continue to track all of these. All of the news bits that are coming out around the Fed and what's happening at the stimulus level. And, just keep watching week to week. We'll be bringing you more and more content to make sure that you're informed about on what's going on in the markets, specifically what it means for, real estate. So stay tuned. We're going to have more content up in the coming weeks. Thanks, y'all.
I got to taste on my lips and I want some